Hello, and welcome to our latest video chat in the Money Show Expert Interview Series. I'm Mike Larson, Editor-in-Chief at MoneyShow, and today I have the pleasure of speaking with Brien Lundin, Editor of Gold Newsletter. Brien, thanks for taking time out to chat today.
Hey, Mike, always a pleasure to see you and talk with you.
Great. Simple question here. As we're speaking, gold's kind of doing battle with that $2,000 per ounce level there. What's behind that move, the strength that we've seen in gold recently, and what do you think happens around this key area?
Yeah, I think it's obviously very important. Big numbers are important in any asset class, any index, and particularly for gold, I think. It typically takes gold a few tries to get through these big numbers for good, but it's been above 2,000 before post-COVID, and I think this is important, and I think this is the one that will take gold to new highs for really a couple of reasons. One of the scenarios we've been talking about in Gold Newsletter was the potential that the Fed was going to be forced to pause in the near future and do so with inflation remaining stubbornly high and well above its 2% target.
Sure,
everybody kind of knew that the Fed was going to have to pause pretty soon within the next few months, maybe sooner, maybe later. And given that, there was two possible scenarios. Inflation would be pretty close to its target, or it would be not very close to its target. I was in the latter camp and really was pushing people to realize that this was going to happen, and it would be extremely bullish for gold, silver, the metals, really any tangible assets, because that would be a more dovish situation, but one that would not be that bullish or as bullish for stocks and bonds, because you would still have a very prominent inflation hurdle to get past to have any real returns. And that's just working out precisely as we had hoped, and is very bullish for the metals. But there's a kicker now in that we have this production cut by the OPEC countries for oil. So instead of inflation maybe easing lower but still remaining stubbornly high, we have a situation where the inflation is possibly going to have another spurt upward with these buoyant energy prices and oil prices. So that could make the situation even more explosive. And I think that's what the markets are looking at right now, and why gold's kind of leaping ahead more quickly than most expected.
Yeah, it's interesting. I don't think our diplomacy is going so well with our Middle Eastern partners here, but that's a discussion for another day, I imagine. I think one of the things I've been kind of looking for is emerging signs of economic weakness. I mean, the Fed's been, very vocal about trying to get unemployment up. Essentially, they won't use those words, but that's what they're talking about. And it seems like we may be starting to see some of those and some of the JOLTS data, some of the other jobless claims and so on. What's your take on where we are in the economic cycle and what that means for what Powell wants to do or says he's going to do?
Yeah, that was one of the big factors. I'm glad you mentioned it. That kind of fueled this move in the metals was that JOLTS report, which added fuel to the fire or the thesis that the Fed would be forced to pause pretty soon. There are a number of reasons why the Fed really should pause and just sit back and take a look at what it has wrought to date and let those lagging effects come in. We had the bank failures, which may or may not have been contained, but signs that something's going to break in the financial plumbing of the global financial system with this very severe series of rate hikes. So we had that. We have the upcoming recession, and all of the indicators are pointing toward that. You see, employment is typically the last thing to come in before a recession, and that JOLTS number was such a downside miss that it added to the view of the evidence that the recession is coming up, is looming quickly ahead. And then one of the things that nobody's really talking about, I guess, except me and you to some degree, is the cost of servicing the federal debt. It has soared over the last couple of months to $852 billion, which is a new record by hundreds of billions of dollars. And it's headed for $1 trillion a year, probably at the next update. And nobody's talking about that. That, I think, is a fiscal, but even a political barrier to the Fed's rate hike crusade that will force them to turn back. So everything's pointing towards slowing economy, all of the evidence the Fed needs to pause, plus some really structural barriers in front of the Fed continuing to raise rates. And then we see inflation really remaining stubbornly high. It's just the perfect scenario, I think, for the metals and really all tangible assets.
Let's say that this is the sort of third time's a charm for gold. It gets to these levels and it really punches through. Do you have an upside target for 2023 or heading into next year? Is that something you do, or any perspective on how far you think this move could go if, again, we do punch through those levels?
It's price predictions are something I do only with profuse complaints. The old adage is, if you're going to be in the pundit game, you can give a price or a time, but never both. But that said, generally speaking, looking at the beginning of this year, I've been asked by a number of sources to give some kind of a prediction. And, I'm just looking at the very real likelihood that gold could rise 20% in this kind of environment, which is something it's done many times in similar environments, and could really exceed that this year. But actually, conservatively and fairly likely, I think, is a 20% gain in gold, which would bring us to a price of around $2,300. Seems outrageous, but when you're over $2,000 and the record high is on a spot basis is around 2063, I think we've got in the near term sights a new record high. But over the course of this year, as this scenario of a Fed unable to really tamp down inflation, and at some point this year, as the markets are predicting, possibly pivoting and cutting rates, I think $2,300 or a 20% gain in gold rather, is a very easy prediction to make.
Got it. Well, Brien, I know you're going to be joining us at the MoneyShow Traders Expo in Las Vegas later this month in April. And I was just curious, any sneak peek you could maybe give viewers of this video, a couple pointers or things you might be talking about?
Yeah, I'm going to have two presentations. One is which I kind of expand on what we just talked about, this really powerful situation developing, or environment developing for gold and silver, where I think that's going to go. And of course, Fed policy drives everything in all the markets these days. And I'm going to explore that dynamic and where I think it points for gold prices this year, and some specific ways to leverage those gains. In addition, I'm doing an in-depth workshop, a 2-hour workshop with my friend Albert Liu, that will cover everything, soup to nuts, from the very fundamentals of why you want to get involved in gold and silver, to the many ways you can do that to buy the metals as both insurance and as investments to leverage these macro trends, and then also some specific recommendations. So really an in-depth roll up your sleeves, a great opportunity for both the newbies to the sector to get up to speed very quickly, and also people who are more experienced to kind of refresh themselves on the fundamentals and also get some good insights into where we're going.
Right. Well, Brien, really, thank you so much for your insights here. And thank you all of you for watching. I hope you did enjoy this interview. If you did, you're going to love seeing experts like Brien in person at the upcoming MoneyShow Traders Expo in Las Vegas. We're going to be bringing more than 100 top speakers together, more than 100 presentations, keynotes, some of the in-depth Money Masters classes like Brien alluded to. So if you're interested in joining us, you like what you heard here, click the link in the video description below. You can learn how you can join us at our all-new venue for 2023, which is the Paris, Las Vegas. Brien, thanks again.
Great. Thanks, Mike.